Hey guys, welcome back to my channel Accounts Accuracy and let's study cash book today. Here we are going to study about cash book, which is also called books of original entry. Why? Because the journal is subdivided into a number of special books, that is subsidiary book or book of original entry. Now here you should know why an accountant maintains the cash book. This book is used for recording all the transactions relating to cash receipt or payment. All the banking transactions relating to receipt and payment are recorded in cash book. Here, when any supplier just provides raw material or any asset to the company, then the supplier takes away cash. Whereas if customer purchases the product of company, customer pays cash to the company. When customer pays cash, that means company receives cash, and when supplier or the employees takes away their salary from the company or cash from the company, cash goes out. So that's why the cash book is maintained in order to record all such transactions relating to cash. That means whether cash has been received or paid. Now, you must know when cash is received, recorded at debit side, whereas when the cash is paid, that is recorded at credit side. This is the format of cash book. You need to make 4 columns at debit side, that is date, particular, ledger folio, cash. Again the same is repeated at credit side also, that is date, particulars, ledger folio and cash. Now these 4 columns at right hand side are the columns for recording receipt of cash, whereas the 4 columns at the credit side are just for recording the payments done by the company. Let's understand it better with this example. This is a question which you will get in your exam, and here you need to know that how it gets recorded in the cash book. You can see here yearly wise and date wise the transactions are provided. Now on 1st March, business commenced with cash. That means the business has been started with cash, that is capital amount of 20,000. So when the business starts with cash, the transaction is, the journal would be cash account to capital account. Now as this is capital, that is why the amount is coming in. That means the cash is coming in the business for the reason capital. So that's why we will write here to capital account 20,000. When cash is coming in, the reason is capital. For the capital, cash has come in. So you will write to capital and you will write the year 2021 at top. And March 1st, the transaction took place. So that's why March 1st will be written in the date column, and in the amount column 20,000. You can see here amount is 20,000. March 1st 2021 is the year, and you will simply mention the reason for what cash has come in the business. Cash has come in the business for commencement of business, and when the business is commenced, capital is given by entrepreneur. Our next transaction is bought goods for cash. Here when the goods will be purchased, obviously cash will be paid to the provider. Now as the goods have been purchased, at the same time when the payment will be done for purchases, it would be jotted down at the payment side. That means credit side, cash is moving out of the business, going out of the business. So that's why at credit side, same way we will write date and year in the date column, and we will write the reason by purchases. Because of purchasing, cash is going out. When cash goes out, jotted down at credit side. By purchases 5,000. The next transaction you can see on March 5th, it's written sold goods for cash. Now as sale has taken place, so that's why cash will definitely come in firm. So that's why entry would be March 5th to sales. Because of sales, cash has come in 4,000. When cash comes in, we jot down at debit side. Again, the next one is goods purchased. Again, purchase is done from Ravi on credit. Now, this is very important for you to know that when there will be credit purchase, that means your purchases to Ravi is the journal entry. That means Ravi is the one whom company owes money. So that is why as cash has not been paid on this date, cash is not going out. That's why it will not be recorded at all in the cash book. You can see we have not recorded any of the side. Why? Because this time is a credit purchase. That means Ravi hasn't got any cash from the company on March 10th. So there will be no record in cash book because cash is not going out of the business on this purchase. Next is paid to Ravi. Now Ravi has been paid on 13th of March. So that's why cash is going out on 13th of March. So now as cash payment is done, we will jot down at payment side, that means credit side, March 13 by Ravi 7,000. Our next transaction is cash sales. On 15th, again sale took place for 8,000. So this is sales. That means as the goods have been sold, cash has come in. Entry would be March 18 to sales because cash is coming in. When cash comes in the business, we write at debit side 8,000. Again, purchase furniture. Now purchased means cash has gone out. So it would be recorded at credit side. Buy furniture because furniture has been purchased. So reason is furniture. Buy furniture 6,000. Here we have not written purchases because it's not goods, it's furniture. Apart from goods, rest of the account is written whatever is purchased. So as furniture has been purchased, so that's why we will write buy furniture 6,000 on 18th of March. Next you can see it's written paid wages. Now paid, wherever you will see paid means cash is going out. For wages, buy wages should be written on 20th March. You can see here it's been written buy wages 20 March 380. Because cash is going out. Again, paid rent, that means cash is going out of the business on 24th of March. So you see here it's written buy rent 400 as cash is going out because of payment of rent on 24th March. Again 26, received. Received means cash is coming in the business, in the firm. So that's why your amount 600 will be written at debit side to commission 626 March as cash is coming in the firm. Next is your withdrew for personal expenses, as it's a drawing for personal use. So that's why these expenses will not be the expense of company, but it belongs to entrepreneur's personal expense. So that's why it will be drawings. And the cash is going out. So that's why it will be written as buy drawings at the credit side because cash is going out of the firm in the hands of entrepreneur. March 28, 1,000 buy drawings. The last one is paid salary. As again it's written paid, that means cash is going out. It will be jotted down at the credit side. 31st March buy salary, as cash is going out, it will be written at credit side. All the cash which will go out of the firm, payment will be done. So all will be recorded at credit side and we will write the reason for what the cash has gone out of the firm. And when cash will be received, cash will come in the firm, we will write at debit side and the reason for which the cash has come in. As all the posting of all the transactions have been done here, let's do the totaling of both sides. We are going to do the totaling of both sides. Here 20,000 plus 4,000 plus 8,000 plus 600 is 32,000. This is the total value of all these amounts. Again at the credit side also 5,000 plus 7,000 plus 6,000 plus 380 plus 400 plus 1,000 plus 900 is 20,680. So what we are noticing that debit side total is more than the credit side total. This we will do in rough. Okay, you are not supposed to write it down, but it should be done roughly. Now as you are noticing, debit side is more than credit side, but both side needs to be equal, that is 32,600, 32,600. You have to anyhow make both side equal. So simply write both side greater amount at both the sides. That means this 32,000 will be written at both the sides. And then you will deduct 20,680 from 32,600. When you will deduct 20,680 from 32,600, you will get 11,920, and this is the balance which you will get after deducting 20,680 from 32,600. And as we are getting 11,920, it's the balance which will be written on the last date of the month, that is 31st of March, by balance carried down as 11,920. Now this is the most important part which you need to know. If you have not understood, you can repeat the video and understand it well, that how this balance has come. This is not tough. Simply do the totaling of both sides and less total should be deducted from the more total, that is 32,600, and when the deducted value comes out, that should be written as by balance carried down. Now this is the balance which is left with the company on the last date of the month, and this will be brought down on the first date of next month, that is April 1st. After March, April comes, and on 1st April the company has the balance of this much value, that is 11,920, which will diagonally be written at the debit side on the first date of next month. So that's all in the single column cash book. You must revise it well, prepare well, and rock in your exams. Thanks for watching, and please don't forget to hit the big fat like button and subscribe my channel.